Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is our daily analytical report. Long time no see. We had a series of seminars in Turkey, in Istanbul, and in Nigeria, but we are back on track with our daily analytical report. So let me start without further ado with the calendar, because on Wednesday we had some interesting events. As you can see, speech from Mario Draghi, PMIs from Eurozone, which came in line or slightly better than expectations from Eurozone, from Germany. But today it will be all about the Canadian dollar. In 6 hours we'll have rate decision and statement from the Bank of Canada. So definitely we should expect a higher volatility on the Canadian dollar. As it is our first daily analytical report this week, I need to tell you what happened over the weekend. We had G20 meeting where we had dinner. Well, apart from the high five between Vladimir Putin and King of Saudi Arabia, that was very important. We had also dinner between China and United States, so basically Donald Trump and Xi Jinping. And apparently dinner went better than expectations. We had a family photo after this. It was longer than expected. People heard applaud after this meeting. And this meeting ended with a statement that tariffs will be postponed for 90 days, which was perceived as a great information for the traders, for the markets, for the risk on mode on the market. So what happened is on Monday we opened, on Sunday evening we opened with bullish gaps on most of the instruments, and yeah, the price was going higher. For the past 2 days that gap was closed, but the thing is that usually it should be like this, that the gap is closed and the movement continues in the direction of the gap. But this time it seems that it's different. So the gaps were closed on most of the instruments, but this movement, downward movement, continues. This is interesting. Well, on most of the instruments, on the instruments like American dollar to Canadian dollar, it's the movement to the upside. So that's interesting. I think that reaction after this meeting, this gap, that was a little bit too much. And traders noticed this after additional comments from the politicians, and they are just abandoning their initial optimism that created this gap. We will see how the situation will develop after the calendar. Let's look at the charts and I will explain you everything. So I guess we can start, for example, with the Australian dollar to the American dollar, where you can see a very pleasant downtrend. It was with us for a long time. It was very technical. Correction, flag, rectangle, correction. Finally, the price created double bottom formation, which was also at the same time this double bottom formation was a part of the inverse clean shoulder formation, left shoulder, head and right shoulder. As you can see, the price broke the neckline with the gap, but now we are coming back, and this comeback is pretty strong. As you can see, gap was closed here already. But the thing is that the momentum is not slowing. The price actually broke the neckline and now is using the neckline as a resistance, which can be perceived as a negative sign. In my opinion, this pullback is a bit too strong. and it can end with a further drop. So my view on the Australian dollar to American dollar is quite negative. Next instrument is cable, where we do have super interesting movements. I think both sides here got screwed. So what we have here is a downswing triangle. Those orange lines, this is a triangle, symmetric triangle. At the end of the symmetric triangle, what we got here is a descending triangle. So a horizontal support and a dynamic resistance here. If we look closer, it was very technical formation here. And look, first we got a false breakout here on Monday. The price after the false breakout went higher because that's what the price is doing after the false breakout. We had a false breakout again above the upper line of the triangle. So false breakout upswing, false breakout downswing. After this we got a false break. After this we got a reaction to the downside. And now broken support is being tested as a resistance. And if the price will come back above this line for good, that will be a proper buy signal, because that would mean a double bottom formation and another false breakout. So here, downswing, and most probably an upswing. So we can forget about this triangle now, I think, and instead of the upper line of the triangle, we can create this horizontal resistance. I'm sorry. We can come back to the charts. So what we are having here is the potential false breakout. If the price will accommodate, let's say, above this resistance, we will have movement towards here. Don't forget about the voting in the comments, which will be next week. On the euro to British pound, what do we have is a bounce from this horizontal support and also a false breakout here. And as we said, false breakout usually creates a movement in the opposite direction. And look, boom, momentum is huge. And now this orange rectangle, which I'm gonna actually delete now because you already saw this, is an inverse head and shoulder pattern, left shoulder, head and right shoulder. Breakout of this neckline plus breakout of this horizontal resistance, that will give us a proper buy signal here in this case. New Zealand dollar to American dollar. What do we have here is still positive sentiment. So New Zealand dollar is one of the strongest currencies because look at this. We had this bullish gap and this gap was not closed yet. On Australian dollar, for example, which is highly correlated with New Zealand dollar, the gap was closed and we are below. And on New Zealand dollar to American dollar, there was a gap and it was not closed yet. Our scenario was a movement to the downside and a further upswing. You can see it's a bit, it happened a bit later. So the movement to the downside did not happen yesterday, 2 days ago, but yesterday. So it took a while. But the thing is that we are still above major supports here, and as long as we stay above this support, this green line, the sentiment is definitely positive on the New Zealand dollar to the American dollar. Now Bitcoin. Bitcoin is doing what was expected by us. Look here, on the 20th of November, we created this scenario. So a small upswing and a drop. It's not about the depth for this upswing, but about the principle. So we were expecting a correction and the movement to the downside, and it happened. The latest development on the Bitcoin, well, here the sentiment is still negative. I do not see any chance for a further upswing, and I keep my target in on the table here. My target is here, $3,000 for one Bitcoin. It makes sense, for example, if you do this and do this, that is a triangle, or a pennant. Actually, the pennant should result with the movement and the trend continuation movement. So breakout and the movement towards 3000. Why? Because of this upswing, 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 resistance, 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 broken resistance becomes support. So in my opinion, $3,000 for one Bitcoin, this is my target for this this situation, this instrument. Maybe you're not happy, but well, I do not record this video to make you happy, but to make you profitable. Oil started this week on a front foot. We do have the bullish gap. We do have a nice correction movement, but again, it is still a correction. It is not reversal. Why it is not a reversal yet? Because we are still below the downtrend line, and also we are below the horizontal resistance, which is the strongest one here. So this resistance was the important in 2016 in December, then beginning of 2017. Then it was a support in November 2017 and November 2018. After the breakout, it was already tested as a resistance here, here, and maybe it will be tested again. But the thing is that you cannot think about the buy signal on oil as long as we stay below 61.8. Only the price closing above 61.8 will be a significant signal to go long. Now that dollar index, dollar index, what is drawing here is a beautiful what? False breakout pattern. This is really sweet. You already saw what the false breakout pattern can do, and let me change the color here not to confuse you. The price most recently broke the midterm uptrend line here, but the price came back also in addition to this here, came back above the horizontal resistance and this dynamic support, dynamic resistance, and this false breakout should give us a proper buy signal. Actually gave us a proper buy signal, but now we do have a correction, but we should see the continuation of this movement, so that should result with the further strength of the American dollar. Now S&P 500, double bottom, reversal, gap, resistance, drop. As you can see, gap was closed, but the momentum did not slow down. I think that this just confirms the sideways trend at the moment, and for long-term traders, you have a buy signal when the price will break the green area, and you will have a sell signal when the price will break the gray area. This is how I would approach this situation here. Breakout to the upside would be better in terms of the risk to reward ratio, because breakout to the downside has a target here, but breakout to the upside has a target on those highs. So slightly better risk to reward ratio is here. Australian dollar to Japanese yen, that was my idea for a trade. It's closed now. on a small loss, unfortunately, but it's like 0.1 or 2% of my capital. What happened here, I traded this inverse shoulder formation or a double bottom formation, it does not matter. We broke the downtrend line. After the downtrend line, we created a flag. Flag ended with a bullish breakout, sideways trend, and it was looking good. Bullish gap, and I think I opened here. My stop loss was originally here. I moved it here after this bullish gap. The price went here. I knew that they're gonna test it, but I thought that after this they will reverse, but they did not, and the price went significantly lower. So this scenario did not work out, which may create an occasion for a further drop. Let's check the Fibos. These are the Fibos, 23.6, 38.2, 50. I think 50 has a big meaning here, and drop towards 50 seems like a good technical situation. American dollar to Japanese yen. This is one of the most technical movement at the moment. So what do we have here is a symmetric triangle formation. Symmetric triangle, which for the past 2 weeks, let's say, was drawing a head and shoulder pattern, left shoulder, head and right shoulder. This right shoulder ended with the breakout of the neckline. This is a neckline that created a drop, and the drop stopped exactly on the lower line of the symmetric triangle formation where we do have a bounce. And price closing below somewhere around this yellow rectangle, that will be a proper sell signal, and this can be a good trading opportunity on the market. Apart from the fact that here we do have an uptrend line, if we connect tails, and let's see where it will go. You can see that if we will connect this and this low, we are on the support too, so no surprise that we bounce from here. A lot of supports, we will see how it will finish. There is also a horizontal support here, so it will not be so easy for the sellers to go lower. American dollar to Swiss franc, here also very technical movement, but this rebound is much stronger than on American dollar to Japanese yen. Here the situation was similar. So a sideways trend and head and shoulder formation. Left shoulder, head and right shoulder, breakout of the neckline, drop. Sideways trend, head and shoulder formation, breakout of the neckline, drop. But this reversal on American dollar to CHF is much stronger than on the American dollar to Japanese yen. But this horizontal resistance is respected beautifully, and this horizontal support most probably will be respected too. So this is the current situation. Maybe you see an inverse and a shoulder formation, for example. I do not. I see a rectangle, and I would trade this accordingly. So the breakout to the upside, buy signal, breakout to the downside, sell signal. The thing is that we are bouncing from the resistance with a bearish engulfing pattern on H4. Maybe that's a good occasion, like for example, to go short in here, especially that this candle closes in 40 minutes. So sell, stop loss, and we can expect a further drop. About the risk to reward ratio, that can be really a sweet deal. Stop loss, let's say 24 pips, take profit 70 pips. So as you can see, 3-to-1 risk to reward ratio, very desirable value. Yes, it's quite interesting. American dollar to Canadian dollar. Here the sell signal was very strong but got denied. This is also a beautiful false breakout. So look, we have a double top formation here and the channel up formation here. We made this double top, we broke the lower line of the channel up formation, right? Well, the thing is that I was expecting a pullback, but I thought that the price will stop here, but the price went much higher. The thing is that they just closed the gap, so the bearish scenario is still on the table. But look what we are having here. What's this line? Oh, maybe I will create this like this. This line is a neckline, right? This is a neckline. Left shoulder head and right shoulder. If the price will close the gap and continue the downswing, the breakout below the neckline will be a proper sell signal. Here, boom. Left shoulder head, right shoulder, breakout, downswing, take profit. American dollar to euro to American dollar. Here, beautiful false breakout. Actually, I got caught in this. I bought here, which was a mistake, but everybody makes mistakes. So, what we had in euro dollar was a symmetric triangle pattern breakout to the upside, right? We broke not only the upper line of the triangle, and it wasn't like a single breakout, but the price went higher, another candle, another. So it wasn't like this, that the price went higher just with a long head and reverse. So it wasn't like that. We broke highs from the previous week, as you can see on H4, highs from the previous week. But the price reversed. False breakout here. We all know what's happening after the false breakout drop. Now the price is having a correction, but I think we have a pressure to the downside, and this can result with a further drop, which goes in line with the situation on the dollar index. Here we do have a pressure to the upside. But obviously 70% of dollar index is euro dollar, so no surprise that those two instruments are correlated. On a daily chart, does not look good. Long head here. Most probably we will see a further drop. DAX had also a beautiful, or not beautiful if you bought this, but beautiful from the technical point of view, false breakout pattern. So this is it. And it happened with a gap over the weekend, right? So what is the situation on DAX is that we do have a triple bottom formation. Maybe you can see the inverse head and shoulder formation, but let me make that clear. Yes, you can call it inverse head and shoulder formation, but typical head and shoulder formation has the right shoulder higher than the head. If head should be the lowest point, if the right shoulder is lower, that is not an inverse head and shoulder formation, but triple bottom. So every single bottom out of 3, every next bottom is lower. Anyways, the neckline in those two formations is the same, regardless of the name that you will use. So we do have a breakout of the neckline, then the price goes down to close the neckline. To be honest with you, I thought that we will stop on the neckline. A few traders also thought about this because we do have a small bump, especially that those were those highs. But then the price dropped, and look what happened, strong drop. Why? Because of this is a false breakout, which usually results with a strong drop. But where is this drop coming from? It's coming from the stop loss orders. So those who bought here had stop loss orders below horizontal support and below the dynamic support. So once those stop loss orders got activated, boom, we have a waterfall. Even the gap closing movement did not help. The price went beyond this, even closed the gap from here from 2 weeks ago. So as you can see, gaps love to be closed, and there is always a high chance that the gap will be closed. With this kind of movement, we should see the further decline towards the green horizontal support. and the chances for this decline are pretty strong, pretty significant. In my opinion, this is what should happen here. And gold, which will be the last instrument in this daily analytical report, and about gold, false breakout again. So look at this. The price climbed back above 38.2. Attacked this resistance again. This resistance was under the attack in end of October and beginning of November. For some time the price was even like on euro dollar, the price was few hours above this resistance, actually half of the yesterday, half of Tuesday, but eventually the price dropped down. How important this level is, you can see here. It's not only 38.2, but it was also support here in December. Then support after the breakout, resistance. So this level is crucial for the midterm situation, at least for the buyers. As long as we stay below, there is no proper buy signal. After this false break, or even if you don't call it a false breakout but a double top formation or a rejection of the resistance, after this we should see a decline. First support is this one, second support is this one, third support is this one, and the third one is the most important. It's the lower line of the long-term flag, like this. Flag is a trend continuation pattern, drop, flag, drop. That's how this situation should end, in my opinion. Let me scan through the instruments one more time to make this clear. Australian dollar, American dollar, that's a negative. Cable, we will see what will happen on this resistance. Euro to British pound, unknown. New Zealand dollar, American dollar positive, Bitcoin negative, oil negative, dollar index positive, S&P 500 hard to tell, Australian dollar, Japanese yen negative, American dollar, Japanese yen, that is positive, American dollar, Swiss franc negative, American dollar, Canadian dollar positive, Euro dollar negative, DAX and gold negative. So, my friends, thanks very much for attending the daily analytical report. I hope you enjoyed that. And now we have a short break, and after that, the webinar about MetaTrader 4. I hope you will all attend this webinar. Thank you very much, and see you soon. In the meantime, visit our Twitter account, our website, altpari.news, YouTube channel, or our Facebook. All the best and good luck on the markets.